I feel like I grew up with these technology platforms that we call the Mag 7 today.
They were less magnificent then.
They were less magnificent. People didn't even believe in them.
Yeah.
I love these periods of big technology shifts that create disruption and opportunity. What's so exciting about these shifts is that in AI, much like the internet, it also has investment implications across all segments of the economy. What I'm interested in finding are the next set of companies, old and new, that are applying and leveraging the AI technology. And in some cases, go from mature ex-growth companies back to disruptor.
Today, we are joined by Tomoko Fortune. She is a portfolio manager based in San Francisco. Super happy to have you here. Thank you for joining us.
Thank you for having me, Mike.
Before you joined us here at Capital Group, you were at a small hedge fund, and talk about that experience. We'll get to how you ended up here, but talk about that experience, if you would.
Absolutely. Well, I graduated from business school in 2003. And if you remember, that was a really difficult job market. Over half of my class graduated without jobs. And it was the post the dot-com bubble. And this was the depth of the tech downturn. And I really wanted to stay in the Bay Area. I really wanted to be an investor. So I joined a startup hedge fund with my partners, David Riley and Chris Lord, who are still like family to me. It sort of sounded crazy at the time to be starting a fund focused on technology. Technology was left for dead. But I really believe in the people, Chris and David. And then speaking of partners, my husband, Don, also worked, and he really cheered me on. And gave me the confidence to forge ahead. So we grinded it out for 10 years. There was technology innovation happening under the covers, but it wasn't as obvious at first. And then the global financial crisis happened, which, as you recall, was a pretty challenging period. And in retrospect, it was a great time to be starting a technology-focused fund. I was responsible for the consumer and internet sectors, and we know what happened to those sectors over the next 2 decades. There was incredible innovation and growth and investment opportunities. And in some ways, I feel like I grew up with these technology platforms that we call the Mag 7 today. They
were less magnificent then.
They were less magnificent. People didn't even believe in them.
Yeah, right.
It's kind of unbelievable.
It's
very controversial, but that was the opportunity, incredible opportunity.
And then you ended up here.
Yes.
So how were we so lucky to get you?
Well, a few things became clear to me over the years. One, I truly am a long-term investor, and part of it's how I grew up in the sectors that I was looking at. I love finding these disruptors and long-term compounders and holding them for years, and that's actually very difficult to do in a hedge fund construct. Number two, I don't like shorting stocks. It was actually a great discipline to learn, to see the bear case in every investment. But I'm an optimist by nature, and I'm also not a very good short-term trader, which is an important skill to have as a short seller. And then third, and probably most importantly, what I love about this job is you never master it. You're always learning, you're being humbled, and you're growing along the way. And personal growth is what's most important to me in my career. And so I was starting to get interested in expanding my investing sandbox beyond the sectors that we were looking at. And so lots of different reasons went into this decision, my partners too, but 2018, we decided to shut down Criterion. It was a very dramatic and heartbreaking moment.
I'm sure it was emotional after 17 years.
Very emotional.
Sure.
Oh my gosh, it was like we were all family. So it was really, really difficult, but the right decision. And simultaneously, over the years, I have, found many of my friends turned out to be associates at Capital. One thing led to another. And like everyone else, 20 to 25 interviews later, I did.
Takes us a while.
But I did join in 2019, and I haven't looked back. It's been incredible, all the things that I had imagined. And then I think something that I underestimated, I appreciated but underestimated, is how difficult it is to have a long-term investing framework.
It's easy to say, it's hard to do.
It's really hard to do. And I now understand what it takes and why it's so unique and why so few people have it. And so I feel like, wow, I really understand why it's such a competitive advantage and feel so fortunate to have that here.
I reference it occasionally, but the first podcast guest was Rob Lovelace. And when we get to the investment edge portion, which we'll talk about you in a bit, Rob's answer, what his investment edge was time.
Yes.
Having our 8-year number be the primary driver of the quantitative investment bonus, it aligns our interest with our clients of long-term instead of the short-term trading issue.
Yes, absolutely.
So you obviously fit right into that in your own mindset and how you thought about things. For you, what's your investment edge?
I was just recently watching a Jeff Bezos interview, and he said something that resonated. He said that humans tend to overestimate risk and underestimate opportunity. And I mentioned that these shifts, they're so much more exponential than people think. And that has been the case in every shift that I've seen. And so having seen that, and certainly having watched a lot of these technology platforms grow into what they are today, and living in the Bay Area, where all the innovation's happening, and being an optimist by nature, when I see these shifts, I'm able to be, think bigger, be bold, invest to that longer term outcome. A lot of people externally are having to figure out how many chips were shipped in any quarter, or is there going to be an AI air pocket? A lot of that's going to be noise over the long term.
They're living data point to data point. You don't have to do that.
I don't have to. I can tune that out and invest for the long term. The other thing I'd say is I've always been different. I'm American. I'm Japanese. I'm a female technology investor. And I think that I've always been unique. And I think that describes a lot of people here at Capital. But what that means for me is that I'm very comfortable being different. And I think that's very important as an investor. Also, having had the very all over the place international background that I have, I'm able to bring different perspectives and backgrounds together, which I find valuable as a portfolio manager. And then finally, having an international upbringing has been a benefit as I look at companies and work with colleagues across the world.
Fast forward, we're in the later part of 2025 right now. When you look out 5 or 10 years, you think about 2030, you think about 2035 because of our 8-year driver.
Yeah.
What do you like? What do you see out there, even thematically or stocks, however you'd like to address the question, but what opportunities do you see out there?
Well, Mike, that probably doesn't surprise you given how I grew up and grew up as an investor, that I love these periods of big technology shifts that create disruption and opportunity. I've lived through some downturns, but I've also lived through these really exciting times of shifts, and a lot turned out to be not real. Web 3.0, 3D printing. So we have to be discerning. I have to be discerning. I have to make sure that the shifts are real. But on the flip side, when they're real, investors have a really hard time seeing how exponential these shifts are. We think linearly as humans. As an example, when the PCs first were introduced, the initial estimate for the market size was 225 million units. Turned out to be 1.5 billion, so 7 times bigger. Internet was 250 million people. It was 35 times bigger. And of course, mobile extended that opportunity. Cloud computing was supposed to be a $14 billion market. It's 40 times bigger and still growing. And I do believe AI is the next one. Estimates are all over the place, but let's call it 800 billion and we'll see. But what's so exciting about these shifts is that, of course, there are ramifications for technology companies. But in AI, much like the internet, it also has investment implications across all segments of the economy. So I hold a lot of the AI infrastructure stocks, but what I'm interested in finding are the next set of companies, old and new, that are applying and leveraging the AI technology, first mover to widen their moats. And in some cases, go from mature ex-growth companies back to disruptor.
So this is about the application of AI, not
right.
Yes, the AI companies directly impacted because they are providers, infrastructure, but you're talking about how other companies and other industries will utilize AI to extend their advantage.
Absolutely.
And I'm guessing by the way you describe it, you believe in Bill Gates' comment of the overestimation of change in the very short term, the next couple of years,
yes.
but the underestimation in change over the next decade.
Yes.
So that's your view, is AI is going to be transformative
yes.
for just about everything.
Yes. And we're long term. What a wonderful
And
position
then
to be in.
in those, and it's a tough question, but you're smart, so I have great confidence in you. But I mean, how do you pick, and everyone will wonder this, there's going to be winners and losers.
Yes.
How do you pick the winners and losers when you're thinking out 10 years? Because there's so many variables that come into play.
Yeah. Well, typically in these times of shifts, big shifts, it's really the incumbents that get disrupted. They suffer from innovator's dilemma. They're unable to pivot, or they just simply won't. I think in AI, it might be different. I think there will be incumbents that definitely fall into that bucket, but I think in AI, incumbents have a right to win. First, they have the scale and resources to deploy this technology, which as of today is very expensive. But more importantly, many of them have large amounts of high quality data, which is really important for AI applications to be successful. And so within that bucket, I think about companies with durable moats through the AI transition, big platforms with sticky users, lots of sticky users. Hard assets versus software and bits and bytes feel a little bit more at risk to me. And then importantly, management teams that are thinking ahead, that are either technology savvy or making the right hires, moving and running faster than everyone else, and executing. And, management teams always matter to me and when I invest, but I think it's particularly important in times of disruption and change. And select incumbents fall in this category. And so they have to execute, but I'm looking for those. And then, of course, there'll be companies that don't exist today that will emerge over the next decade, and we're looking for those as well.
So you don't necessarily need a short-term payoff in their big AI investment. You need the vision and the trust in the management to execute that vision.
I think that's a big part of it. And we are also getting proof points along the way and data points, and you're seeing it in some companies. It's pretty fun to figure out.
You talked about company management being important to you.
Mm-hmm.
Why is it so important? And are there any company visits that stand out in your mind that you say, wow, that was a game changer in terms of how I viewed the opportunity?
Well, it's important to me because, again, I grew up in a sector like technology where it's so dynamic and it's changing so fast and so innovative. And so if you aren't very good at executing, you will not survive. And I think that's true in a lot of industries. And so I think, that's the first thing I'd say. In terms of like the companies that or management meetings that stand out, Mike, I have to say all of them. I mean, outside of capital, we don't, most people don't get the management access that we do. Management teams don't want to talk to hedge funds that are trading their stock or trying to figure out the quarter.
Long-term investors.
They want to talk to long-term investors who are thinking like partners, and that's who we are. So, since I've been here, I get to meet the entire management team of Amazon, CEOs around the globe. I learn and grow so much from them. And then the other thing I'd say is that our analysts have such great relationships with these companies. I'll give you an example. Drew Macalis, who heads our tech cluster.
Drew's great.
He's great. He brings together annually a bunch of CTOs. He calls it the CTO Summit. And CTOs across different sectors. He coordinates with all the analysts and brings CTOs from retail, from Europe, and all sorts of different companies. And we talk to them to help shape our AI mosaic. Amazing. It's not something that would happen everywhere.
We don't get everything right. And you said it's a very humbling activity, investing.
Mm-hmm.
If you're right 55 or 60% of the time, you're probably doing pretty darn well relative to benchmarks and relative to the opportunity set. So go back to lessons learned. What's a story you'll share with us that it didn't go so well and it helped you become a better investor?
Well, like everyone, I have at least 45% of my investments go wrong. And so I have so many. But I might talk about one that's more recent, and that happened here. Carvana is a leading used e-commerce company. It's run by an incredible management team, and what they're doing is so difficult. It's complex, it's capital intensive, it's expensive, it's messy. But if they build it out, that difficulty becomes the moat. and potentially allows them to own the market, which is a very big market opportunity. It's about $1.5 trillion to $2 trillion annually in the United States alone. And so I brought this idea to Capital 4 to 5 years ago, and the stock initially tripled or quadrupled, and I thought I was a hero and so great and feeling good. And then they made a very big acquisition and levered their balance sheet at precisely the wrong time. Interest rates were about to rise. The used car market was about to go into a deep cyclical downturn, and the stock started to spiral, and I was too slow to realize or admit that the thesis had changed.
Right. Something was different.
Something was different. They impaired it didn't matter how great their long-term vision was. Their balance sheet was impaired and their survival was in question. So the thesis not only changed, may have been broken. Thankfully, I sold the stock before it went down 99%.
Wow.
It's unbelievable. I think I'm right in saying that there's not a stock in history that has gone down 99% and survived, but they did. They survived, and they slowly fixed their margin structure and their balance sheet. And when that happened, the original thesis was back on track. But I was too slow to come back to it because I was I was scarred and humiliated.
It was emotional.
It was emotional. So many lessons in that. Investing is such a fine line between having the courage and conviction to stand your ground when you're right, but also the humility to know when you're wrong. And to do that, you need to be objective at all times and flexible. Had I been objective, I would have realized that the thesis was potentially broken when they impaired the balance sheet, and then back on track when they fixed it. I made the same mistake twice in the same stock. And so I'm hoping that sharing this story will spare some other people this painful lesson.
But they're both great lessons. Mm-hmm. When something changes, you need to change.
Yeah.
And that happened on both sides.
Right. Both sides.
Right? Because the balance sheet that was impaired got fixed.
It's not what's happened. What's going to happen from here is kind of the objective lens that you have to have at all times. And it's really difficult to do as a human. But it was a great lesson.
In our discussion before we got together to do this podcast, you mentioned a book that you like to read is Essentialism.
Yes. I've talked about this book a lot.
Just talk a little bit about it for this crowd. Some folks may have heard it before, but I think it'll be interesting.
Yeah, absolutely. It's a pretty well-known book. It's written by Greg McKeown. He's the author, and he makes the case for doing more with less. Too much clutter in our lives, in our work, in our portfolios leads to inferior performance. And that really resonates with me, I think partly because I'm a global diversified portfolio manager, but I'm also a mother of 3 in 3 different schools. I'm a wife. I'm a friend. I'm a community member. I have a lot going on, and I feel like a little focus could be helpful for me.
And so I think that's so important. I mean, you talked about noise before, and one of your advantages is not going through data point by data point and getting sucked into the quarterly noise. This is about removing the noise from your life.
Yeah.
And I think that's probably helpful in a personal capacity and a professional capacity, both ways.
Both ways.
You also, from what I hear from others in San Francisco, you like to have fun.
I do.
And fun with colleagues. I hope I have a picture up here. So this is a picture, and I'll describe it, and you can talk about the experience. But for folks who are listening, there are 6 individuals in this picture, and it looks like you're at Oktoberfest. Otherwise, you're at a Halloween party. I'm not sure, but I'm guessing you're at Oktoberfest, and you have David, Tomoko, Lara, Michael Cohen, Carl, Diana. Talk about this picture and how you like to have fun together, and how, importantly, it makes the culture work so well.
Yeah. I love this. Well, this was one of my favorite retreats. It was in Munich, and it was 2022. It was a challenging time in the market, and so we spent 3 days really focused on our investments and our portfolios and working really hard. And at the end of it, we all got in our drindles, and we headed to Oktoberfest, which, as you can imagine, was so much fun. And I know that Carl Kawaja's talked about humor being important in investing, and my nuanced take on that is that we love what we do, but it's also very hard. And there are good days and there are bad days. 2022 was a really tough year. And having fun along the way certainly helps. But importantly, it helps bring us together. We have these advantages. We have the breadth and depth of research that we have. Again, these are things I really appreciate coming from the outside.
The resources.
It's unbelievable. And then we have multiple and different perspectives. And that's uniquely celebrated here. But we have to bring those together, and we can't do that unless we have open debate, open discussion, open disagreement. And that only comes if you have trust. And so these moments where we're getting on these tables in our dundles and dancing and having fun.
That was a good group, too. That's a fun group.
It was a great group. We form better relationships. We bond, and we create that trust.
I do want to get to the office treasure hunt and why we do this, just for folks who may not be based in the beginning of the office treasure hunt. I go into your office in San Francisco in this case, and I find something. My belief is you wouldn't have something in your office that wasn't intentional to put there.
Yep.
So I'm going to share with you what I found in your office. And I'm going to ask you to describe. So my wife loves cats.
Yep.
I will say, I do not. But my wife loves cats, and there are two of these, which I think are Japanese super lucky cats.
Yes.
I'm going to ask you to hold them and describe them for our listeners. And why are these cats in your office, Tomoko?
Well, let me give you a little background. I did talk about humor being really important, and we had a lot of fun in our old company and a lot of props. And then, do you remember the movie Castaway? It was Tom Hanks, and he's stranded on an island after a plane crash, and he finds this Wilson branded volleyball. And so for 8 years, this volleyball that he calls Wilson becomes his friend. He talks to Wilson for 8 years alone. And so we had this Wilson volleyball. And anytime the market was disagreeing with us or he felt alone, we would go to Wilson. And then the super lucky cats, in Japanese, they're called maneki neko. They're Japanese cats that are kind of, their arms are kind of waving in good luck and fortune. And Fortune is my last name, of course, and Japan's my heritage. And so we had a lot of these kind of lying around. This one in particular moves.
Well, they're both moving right now.
They're both moving, yeah. They're solar powered. And so this guy I had for a long time. And then my partner, David, went to Japan, and he brought back a super lucky samurai to accompany my super lucky cat. And so I keep them in my office. They make me happy on the hard days, and they hopefully bring me some good luck and fortune.
Excellent. I'll ask you to put them back in here.
Okay.
Talk to me about a mentor or two that have helped you in your career.
So I've had so many. I'll start with my first manager, Iwata-san, in Tokyo back in the 90s. Chris and David, of course, at Criterion. But I'll mention one here at Capital. Chris Bookbinder has been on this podcast. He's an incredibly respected leader, a very talented investor. And when I think of Capital, it's special culture, it's excellence in investing. I think of Chris. As an example, when I first joined in 2019, he's not even in my unit, but he really went out of his way to help me integrate here. He would take me out to lunch periodically, and we'd talk about a lot of things. And then 10 months in, COVID happened, which was a challenging time for everyone. But for me, as a relatively newer person, it was especially hard. And so we pivoted from those lunches to long hikes in Marin and San Francisco, and we continue to talk about my career and my life. He and his wife have become great friends to my husband and me, and I'm really grateful for Chris.
Chris is amazing. I was on a call with him yesterday about something, and he is just so calm and wise. So I'm not surprised.
Yeah.
That's how I think of him. And many other folks have mentioned him as a great mentor as well. What about you? When you mentor someone, what do you think about? What do you try to pass along to them?
Well, first and foremost, I would probably share some of the learnings from Caravana since it's so fresh in my mind. But the main thing I say to people when they start their career is the importance of being you. And, I kind of talked about being unique and comfortable with that and why that's important. There are so many different ways to get to investment insights. There's so many different ways to do this job. You have to figure out your own way, your own path. And that's not just your broader style, but with individual investments as well. There's so much noise, lots of different opinions, and certainly other investors, the markets. The stock itself is going to test your conviction often. So you really have to have your own belief and your own conviction. And that's kind of the main thing I try to
stick to your guns unless something changes.
Yes, unless something changes.
And see through the fog
exactly.
and see through the fog and the noise. Outside of Capital Group, I know you're passionate about education. A bunch of our folks at Capital are, which is so wonderful. Mm-hmm. You had a recent high school graduate by the by, so congratulations.
Thank you very much.
3 graduated.
Thank you very much. We made it.
but talk about some of the things you're involved with on the charitable side, because community is one of our 5 core values. We give back. Everyone at Capital Group gives back. How do you give back?
Well, Mike, I do feel like it's somewhat of a miracle that I'm here. My parents were wonderful parents, but they were Japanese. They didn't know much about U.S. colleges. Somehow I ended up at Dartmouth College, which changed the course of my life. And I do believe education is the key to unlocking opportunity for many people. And so I serve on the Dartmouth Investment Committee, which is a wonderful way to give back to my alma mater. I also go back to Stanford Business School in Berkeley, and they're local, so it's easy for me to get to, as a guest lecturer. In the hopes that I inspire at least 1 or 2 people like me to pursue this amazing career. And then I serve on the boards of my kids' schools as well, and which has been rewarding and really, really fun.
Yeah, investing in education, such a great thing to do. We do have a final segment that we always do in the podcast, which I know you've watched.
I have.
So we talk about gratitude. In many ways in society, I believe, sadly, a lost art of gratitude. We always try to bring it back in here.
I love it.
We're all fortunate to be at Capital Group and be able to help tens of millions of people achieve their retirement goals. What are you grateful for? And I will give you the mug, which is next to the cats.
Wonderful.
But here is your mug, and share with us what you're grateful for, Tomoko.
There is a cliche, it takes a village. But in my case, it's so true. First and foremost, my husband, who has been a terrific partner in raising our kids and building our lives and our careers. My mother spends 6 months of the year living with us and helping us out. And she has a wonderful relationship with my children, which is so special. My brothers, my cousin Katie, who she's like a sister to me, but she's been a true aunt to my kids. All of my in-laws, my mom friends who look out for my kids when I'm stuck at work or I'm not around. Each and every one of them contribute to enabling me to do this job I love so much, and still hopefully being a great mom to my 3 wonderful children.
That's great.
Very grateful.
That ecosystem that helps surround you and helps you be calm and successful and happy is so important for all of us.
I'm so grateful.
Everyone has their own ecosystem, and I'm sure they're all grateful for it in their own ways. I am as well. I wanted to thank you for 30 minutes. You've shared your wisdom with others, so we appreciate it. I think those lessons learned and your story and how you got to Capital Group and why you're here, all are so important. So people love to get a chance to meet our investment professionals and get to know the real them. We got to know the real you, Tomoko. So thank you for joining, and thank you all for joining, and I hope you join us next time.